Hi viewers, how are you? Welcome to Your World with Prakash Kapila. So this episode, as promised, I have a very important subject to discuss. Last time we discussed about global trade because of Russia-Ukraine invasion. So continuing on that mode, we are now going to talk about global recession. So right now there have been the biggest news we have right now is Powell has came up. Powell, who is the Fed chair here, has said that he's going to increase the federal rate uh, for at least 5 times with 50 basis point. So what is a basis point? If you don't know about that, basis point is 1/10 of 1%. That is 0.01%. So 50 basis point is 0.5% increase. So when the Fed rate gets increased, all the rates that the banks operate on, the treasuries, the yields, all of that will get affected. So when the Fed rates keep on growing, it means the borrowing rate for the banks and for the people and in general will increase. So when I'll give you a very simple example of how this inflation will affect you. Say you have $110, right? You are buying, say, 10 goods worth $10 each. Previously, without the inflation, if the inflation was at 1% or 0%, then you could have bought 10 goods, all the 10 different goods with this $110 and still have $10 in your hand. So if the inflation is at 8%, right now it has gone to 8%, what it means is every item that you're buying is more costlier by 8%. So when you take 8% of $100, then you get $108, which means previously you used to have $10 in your hand. Now you only have $2, and you have not changed your purchase pattern. You have not changed your buying pattern, but you still get these things. So with that in mind, we'll go more deeper into that. So with us, we have Ravindra, and he's
Hello,
from
everyone.
Bay Area, Silicon Valley. He is one of the Silicon Valley guys. So he understands how the semiconductor industry has been affected. And okay, you can start off, Ravindra. Please tell.
Yeah, it has inflation. I have seen here before the eyes, Prakash. So initially, like 1.5 years back, whenever I walk into any groceries and try to buy Arisellu, right? One box is costing $4.99, and right now they are selling at $7.99.
Double, almost.
Almost. Yeah. So instead of $5, I have to pay $8, like $3. It increased for the last 2 years, I can say. Not only here, even because for the house cleaning, whoever we request, right, whoever comes for help, they are also asking for more money. So inflation is reality. It all stick everywhere. Because of this COVID, and the US government printed a lot of money, right? So more money was circulating in the market. So obviously the prices went up everywhere in the Bay Area. That I can see very clearly. So that's the taken, Prakash.
Okay, so in your work environment
Right.
and in the job market there, do you see any drastic inflation? What is your take? Are we in recession? Are we in?
I think we are in recession,
Okay.
Prakash. The main reason I can say is because during the COVID times, the government is printing dollars and distributing to the people, right? So there are so many. If you remember, the stocks and all, they went up like crazy in 2021 because of the free money people are getting. and then people have no work to do right outside. They are busy busy in the WhatsApp groups, and they say the technology is going up, so the Zoom stock has went up. Then all the technology stocks related to Zoom with a lot of rumors, it is doing good. That is, so every stock went up. People made money. People are happy, right? All good. But the thing is, once the government stopped sending money, now they have to go and find out jobs. All these high-profile stocks, they are coming down. That's where currently the stock market is also going down, right? This is a very clear signal that everything is not good. So I feel there would be a recession in the offering. May not be a serious one, but you cannot ignore it. There are signs. There is elephant in the room. We need to acknowledge it. There is some recession. That's how I'll put it.
Oh, okay. So
even layoffs also going on, right?
Wells Fargo. Where do you see layoffs in this?
Yeah. Wells Fargo has cut down on mortgage teams, right? They had like I think maybe 300 people, and also Zoom did it, and at least some I come across some 10 company names. They are doing layoffs right now. So all mortgage related.
Yeah, Carvana has done. Twitter has stopped hiring more people.
Yeah. Even in my company where I work, they put a hiring freeze for some teams, not all teams, but at some teams.
So when you have to hire someone, right, what is the questions that your management is asking you?
First one is they need more justification now, Prakash. Not like before where they will approve it. So it has to go up to the EVP, SVP level for any hiring, not just VP. So they are asking why this particular position is needed. If it is a full-time contractor, consulting is okay, but full-time, and not only that, consulting to full-time conversion also now it is taking more time. Previously they are liberal, now they are asking more scrutiny on why we need to have this position as a full-time. So all these things I'm seeing in the last 1 month, I can say.
Oh, past 1 month you're seeing.
Past 1 month, I can say.
Yeah. Oh, okay. That's a new trend that is started. Okay, that's good.
Right.
So, yeah, why I'm saying this good is basically because the labor statistics are saying that for every 2 jobs, there is only 1 person to do the job. And yeah, 1.9 is the thing. So obviously there will be companies that how the hiring process happens is the companies will think about 6 months down the line, 8 months down the line, 1 year down the line, and then start the hiring process. If they think that if there is very uncertainty, then they will stop the hiring. Hiring is the first thing that gets affected. So if you look at the hiring process, then you can look at the trajectory of the recession. Basically, recession, the blind thing for recession is no jobs. If jobs are not there, you are in recession.
Yeah,
if
means
jobs are there, you are not in recession. That's
no, it's a fair point, Prakash. I agree with you. So here, what happened was during this COVID, right, when government is sending money, right, because I used to live in a rental house, I used to get the checks for the previous tenants. So I have seen them, everybody getting it. So a lot of people, they moved to remote places, Prakash, and they were not looking for any positions as well, for any jobs.
That happened for like 1 year only. Now it's not.
Now everybody is back to work.
Yeah, now the money is not going there.
Yeah, okay.
So that is the reason why, and even after getting, like you said, people have, the basic thing was, once the COVID hit, they couldn't go to their jobs. For like 3 months, there was no way that people, even the money was not passed in the Congress and the Senate. So they didn't know whether they'll get the money or not. So that's what, I mean, I'm talking about average worker who is like earning $15 or $10 wage earners. So for them, it has stuck very hard. So therefore, when they got the money, like $1,500 a month, I believe, $1,500 a week. Week for few people it's a week, for few people it's a month. So when they got that much money, they didn't need to have any work.
Right.
do any work. And this continued for like 1 year or 1.5 years. We are talking only about US,
Yeah, that's the
not
main
about
reason
any
for all these penny stocks becoming rich, Prakash. Everybody got money, lot of time. They were in some WhatsApp group, whichever stock they advertise, and immediately they brought it up, right? So that's the whole game. It was played.
like
Played.
AMC and
Yeah,
GameStop
right,
and Robinhood came into the markets, and
right,
it also started. So
right,
yeah, a lot of what in financial terms we call new entrants as retail investors.
right,
Okay, so these retail investors, there a lot of people started
yeah,
doing investing, and
right,
the retail investors started bumping up the stocks so much so that even the
right,
hedge funds um, were loss of money.
correct,
Archegos
correct.
Capital, which we talked about before.
And second factor, Prakash, even the interest rates going up also goes against to the this one, because now for a common man, he would rather rent the house than a buy house, right? So mortgage industry is where some layoffs happen because they do see some foreclosures. So that's what my friend who is in the realtor business, right? He was saying people cannot afford it.
Which
They were moving
market
the
though? Is it San Francisco or
yeah, Bay Area, Bay Area.
Bay
He's
Area?
here only. Yeah, means it is not like a very number like 2007 or 8, but they do see some foreclosures happening here and there. But still, banks are happy to take them because they can always sell them
Resell it.
because yeah, they can resell it. But there are some signals around because, and second thing is, even for you have to buy a house at a higher price, especially in Bay Area, and your monthly mortgage also for a normal house you have to pay like $6,000 per
But
month.
average salary is also like 250K, right? If I'm not wrong.
Yeah, you are right. And also see, many company stocks are almost 40-30% down in the last few months, right? So their pay up potential in the future means it will shake your foundation on which you bought the house, right? Some moment
Confidence
confidence
level
levels
will.
will go down,
Yeah,
right? Little bit.
that's true.
So that is, and this interest rate hike will percolate to other segments, right? So other areas and
Yeah,
also,
I have one thing
yeah,
about these interest rates. When Fed increases the interest rate, there are three major things that happen. The other one 2-year bond, 10-year bond, and 30-year bonds. These are the treasury bonds that
right,
all of the world, all the central banks, they don't buy interest rate. They buy these
right,
bonds, these
right,
treasuries.
right,
So when I compare this is very paradoxical. So when the interest rates increase, the bond rate should also increase.
right.
But the interest rates have increased, but the bond rates have decreased when you compare it with the 2018 level. So 2018
Hmm.
level,
Is the peak,
the
is the high.
3.5 was the interest rate, 10-year interest rate.
Hmm.
And the 30-year also was close to the, I mean, it will be a little bit more. So when I compare 2018 rates to the present rates are lesser than 2018 rates.
Yeah, it's a
And that
paradox.
is,
Yeah,
it's a very big paradox, right? At the 2018, the Fed rate was not that much,
correct.
but the 10-year, 30-year, and 15-year were not low. They were
Correct.
like more than 3.5%, 4%. If you are trying to refinance, nobody was giving you the interest rate for less than 3.5% or 4%.
Right.
Suddenly, 2020, I think the rates have fallen like anything. And
Right.
2021 was the pivot point where the home rates have come down to 2%,
Right.
1.5%. A lot of
Right.
people
Right. Right. A lot of people refinance at that time. 20. I think last year is the last window you have,
yeah,
like up to this December. I think. Now I think by 2026 onwards, you need to pay more interest rates. They are going to increase the interest rates. So who will pay
but
the American debt, right?
if you have
It is.
locked in on the rate, your interest
No,
rate
no.
won't change.
Mortgage is fine. All I was saying is on the our tax rates and all, right? As of now, they have parked it up till 2026. After 2026, they will recheck on our tax
Tax rates,
brackets and
okay.
all. So it is going to go up. That's what a lot of people say. Even I believe it will go up from 2026. So do all good things in the meantime.
Whatever you can do if you have money.
Whatever you can do. Yeah.
So so in the global recession scenario, we have countries like China, Russia, India that are the major players, and EU that are the major players right now, because China and India constitute like $3 billion, 2 billion, no, 3 billion people,
Right.
1.5 to 1.
3 billion
3 billion people out of total 8 billion.
7.5 or something. Yeah, we are 40% of the
40%.
world population.
China and India is a 40% of the total world population.
Right.
And anything that happens to these countries will affect the world, directly or indirectly.
Right.
So what has happened in China, or China is in recession right now. It may even go into.
They have created a big real estate bubble, and that's the main thing. And even if you look at historically, also the same thing happened in Japan some 20-30 years back. And also I don't remember, some other place also went through, like they created a big real estate bubble and they did not find any buyers, and finally it collapsed. China also same thing is happening right now.
And the government is not, it is a government, the government company created the finance for a lot of real estate guys to build cities where nobody can afford to live. So previously, what used to happen around 2000, from 2000 to 2010, or 1990 to 2010, what used to happen is cities were built and then the companies were also built. So China invested a lot in whether it's People Bank of China, CIBC.
Yeah, the main thing is this is how you should see, Prakash, in any country's GDP, right? Assume that there is one island. And nobody built anything, then the GDP of that island is zero. Okay, but on the day you create a one road or some action, immediately they will say some GDP is there, right? So China, so far they are able to create artificial that growth by doing this, building these cities and over again. And the main issue with the communist portion, right, to the democracy or to the American side, right? In American side, they let the whole company fall. There won't be any government which supports that. They feel it's the company's executives, they should see the reality and do stuff. Whereas in the communist Russia or in the China, the main thing is the government will take care of constructing these things. So that's where it is like you are riding on a tiger, so you don't know when to get out. So
when the tiger is going to kill you,
right. So that's the main thing here.
But in China, recently what happened is they said we are not going to support. All of a sudden, see, the markets is all about confidence, is all about forecasting, right? If I know that someone is going to give me 10 rupees or $10 over a period of 10 months, then I know that I have $1 with me and I can spend $2. I know how to get back those things. So if I don't know that I am getting those $10, then I am like, okay, let me keep whatever
whatever you have.
Whatever I have, I'm going to hold. And I'm going to say that, okay, I don't have money. Whatever is the case, I don't have money, I can't do anything. So like that, what happened? The investment in China came down to standstill.
And second factor, Prakash, China versus India, if you compare, right? China's GDP is more of not just this, and second thing is their exports driven. So exports driven economy, whereas India's GDP is more internal. And second thing is India's GDP is 1/5 or 1/6 of China's GDP in terms of economy. So even if it recession, right, China impact will be higher on you perceive more on the world side than India's side. So that is another point.
Yeah. So apart from that, what happened is there is another thing called lockdown. So what did China do is, like, all big cities, all companies, big cities, everywhere, there is no economic activity. It's zero. it had to be zero for like 1 year. Now what happened is the China exporting companies are not able to export. Till now, the world was okay because people stashed away as much as they could. That they called with the demand forecasting, right? So instead of buying 10, you would buy 100 or 200 and store it in your warehouses. So till now, the warehouses were okay. Now
it's all over, Prakash. I would like to come to this point because I built my house, right? Like 1 year back, for the shower panels, I used to pay $299 or $249. When last time I went and checked, they are at $599. So they just doubled in 1 year. The reason they were saying is we ran out of all supplies from all the warehouse. Now that's where the prices went up actually. So you have to pay more money and get it. It's all because of China's that lockdown and all. Right? So they're not.
And even cars have increased like anything. So at one point of time, I'll share the chart. So in the inflation perspective right now, how it is if you are buying a new old car, if you are going ahead and driving the car for more than 300 miles on a weekly basis, then you are seeing a lot of inflation because you have to put a gas, you have to drive a car that's not giving you a great mileage and all those. So that is going to actually affect the purse, finances on a day-to-day basis. So you have to go daily you have to put the gas, daily you have to go.
So you are actually driving the economy, right? If you are not taking your car out, means obviously that stops, right? The moment you are outside, then obviously you are creating GDP to the country, right?
In some way, shape or form.
In some way, some shape. Yes.
You go and buy a coffee. You go and buy sand. Small things have a huge impact because it's all about number of people and the price that make up the GDP. So if you are, if like 1 billion people are buying Starbucks, then you have around, or 1 million people buying 100 times the Starbucks, which is not a huge this thing, but that happens. So that is going to give $1 billion GDP. So my take on this is, I think we are getting close to the thing. So let's complete. I think we just have around 2-3 minutes.
Sure.
So my take on this is we have around, there are 5 things that happened in China that literally made the whole global economy dwindle.
Shake. Correct.
Yeah, definitely. Correct. One is the industry got shut down. So your cars, your chips, your raw materials for the fertilizers, your anything, any shape or form, anything that you have as a raw material coming from China, it has stopped. So that was the biggest blow. The other thing is the oil has the gas and the oil.
Ukraine-Russia impact, right?
But in China, what happened is because of the shutdown, the gas and oil have not yet hit the market like it should hit. So that's a that acted as a counterbalance. Number 2. And number 3 is the pent-up demand that is there across the world has suddenly started, showing itself up. So even in China, you see a lot of where there is no lockdown. Only lockdowns are happening in Shanghai, Beijing, and all crowded cities, but not in the other places. So those places, the transportation and travel are like picking up like anything. So why a lot of counterbalancings are happening. When the interest rate is going up, but the bond yields are coming down, the effect is not that much. So therefore, the currencies are not actually.
US dollar emerged the strongest in the last 1 week, right?
True.
Because of
I'm saying the real impact is not felt yet.
Not felt yet. There are still signals. I think we did see these kind of signals like 3 years back, 5 years back, also, right? See, US did not face any recession in the last, you can say 12 years, right?
12 years.
So
12 years boom is there, and
yeah,
that boom will continue. So for me, global recession is basically, even though India and China are like 40% of the population,
right,
when it
right,
comes to economy,
right,
50% of the economy is US and EU, European
right,
Union.
right. It is more than
So,
that, actually. Yeah.
yeah. So with the European Union, except Germany and Holland, all other countries are now not dependent on Russian oil.
Right.
Germany, Holland.
Everybody is moving out of Russian oil thingy, actually. So finally, this whole thing will be centered at Ukraine and Russia only, right? Once people's dependency goes up.
So so people have figured out how to circumvent the Russian oil. Okay.
Right.
So the impact of Russian oil that people thought would be very humongous is not panning out. It's people are able to manage with 1 million barrels per month being pushed out. So
somebody's loss is somebody's gain, Sharath. So obviously,
here
it's Russia. It's a complete loss for Russia, actually, right? It is
Russia. They say recession is like inflation is like 30% now.
Yeah. Correct.
So during 1990s, like a lot of the people don't know about it.
Right,
during 1990s, the imports to Russia were zero. When Soviet Union was falling, Soviet Union fell because of these high inflation. Gorbachev was saying we have rockets to go to the moon, but not underwears to our
people,
kids.
to the citizens. Yeah, kids. Yeah.
So therefore, that kind of scenario has come to Russia right now. It all depends on how long the war will go. So Russia and China are definitely in a big doldrums. But the other side is India is able to catch up a little bit of China demand. I mean, export demand. The wheat is one big demand that has gone up, and IT is also
right. They are picking up again in India.
So the other thing is why I think the recession is not in the cards is basically one biggest indicator is for every job there is no person here. Only for 2 jobs there is 1 person. So the wage, even though inflation is up, the wage inflation is what is more important. When people are earning more money, and they don't mind spending a lot of money. So from tour, like he said, I was paying $3.99. Now I'm paying $7. So $3 to $7 is nothing for a person who is earning like even 100K. Now he's earning 500K. That's a different issue. So for an average person, the effect of inflation is not yet seen, except for those who are driving for long distance. With COVID, that kind of job.
The thing is, in America, the food is very cheap, right? So obviously, people, the hunger index and all is very low, right, in US. So that way, even you don't feel people having issues with their inflation, Sharath. So what you said is very correct. People can still afford, right? Everything.
So closing remarks, Ravindra.
There are signs for recession. I do believe there will be a recession. At least some correction will be there in next 4 to 6 months. That's what I feel. But unless, but as you are saying, there is no recession, right? So let us see. Let us wait. I hope there is no recession. So let us hope.
Okay, folks, we have selected a topic where we, even if we do it every day, still there will be new things coming up on this. So we are out of our time, and we'll be back with more interesting topic or equally interesting topic next week. Thank you so much for being part of our show. You have a wonderful day. You have a wonderful week and weeks ahead. Thank you.